Hello guys and welcome back to Shaliki Street. My name is Evangelos Shalikis and today we are going to talk about Alibaba. The stock, the company will go in depth and very deep on many different metrics, many different charts, financial charts that they have on their fundamentals. We will take a deep look into, and we will proceed by looking at what the super investors out there are doing with this stock. Are they buying? Are they selling? This might be some useful information that we could use in our advantage from the recent Q quarter filings. And we will finish this video by comparing the Chinese index with the S&P 500, the American index, to see where things are standing in China, what happens over there on the other side of the earth. And at the very end of this video, I'll be sharing with you the Street Pie, which is the main portfolio of this video, where I use my young age as an advantage to go extra aggressive on high growth companies to create outsized returns, to create alpha, and basically maybe even beat the S&P 500. We don't ever know. That's what we will look at the end. The small position I have started on Alibaba, and we will proceed from there. Let's go ahead and jump in. The first thing that I want to start from is its current price. Alibaba is standing right now at $171 per share, and there is some huge volatility going on this stock. It goes all the way from 150 to 160 or to 170, all the way back to 160, and then back to 170. I think we may have reached a bottom. I'm not sure, but we may have reached a bottom for this stock. It might even hit 150 maybe sometime again, but I don't think it can go that much lower. At the worst, 125 or 130. I don't think it can go that much lower. What I do is I DCA every day into this company, and I will explain you exactly why. The first metric that we will look is the PE ratio. The PE ratio of Alibaba right now is around 20.6. You can see it at the last couple of weeks going all the way from 19 to 21 back and forth. If we compare this number right here to Alibaba's historical PE, which means how it has been going through time, what we will see is that all the way from 2015, Alibaba goes from 30 to 15, 19, but most of the time, it has stood around 55 to 40. That's what you will notice. 36, 33, 44, 51, 46. So what we can instantly get out of this is that most of the times it stays around 35 to 40, you can say. What we show here is some huge growth from the company, some high EPS, and its stock didn't grow as fast. It reached its peak last year, 2020, and from there we went downhill all the way back to 20 price to earnings ratio, which I think 18 and 17 will be the bottom, as I said at the start of this video. So the conclusions that we can draw from this metric, from the historical PE relative to the current PE of Alibaba, the price to earnings ratio, is that it is basically undervalued. You can call it undervalued, and I think it may not be that bad of a time to maybe start a small position, at least for me. Of course, this is not financial advice. I'm not a financial advisor, you know that, but let's move on. I think it's currently undervalued, and I like the stock, so that's why I have started my position as well. The second thing that we will take a look at is a peek on what the super investors out there are doing. As we can see here on the right side of the screen, is that Alibaba is one of the top 10 stocks by percentage on their portfolios, on their statistics. So let's go ahead inside and see what happens with this stock. If I'm not mistaken, the biggest name right here is Mohnish Pabrai and Charlie Munger. I don't know all the other guys. I know some of them, but not everyone. Charlie Munger, I think, was one of the first guys that started the position. And if we check his average price, he got in as high as 226 reported price of average price per share, which is pretty high. And he's actually down on his investment of $37 million. The second picture that we can see right here is that most of these guys, most of these super investors, they still add to their positions on the last quarter. They still added even more stocks, and we see really big numbers right here: 30%, 68%, 53% from Mohnish Pabrai. And I think this guy doesn't even have many investments too. He says he has 3 investments right now from what we can see here. I thought he had more than 3. I thought he had 5 or 10, but It shows 3 right here, so we will stay with that. And he added 53% to his position, to his initial position, which is now 21% of his portfolio. And I thought that he likes to have his portfolio stay around, for its position, around 10%. So 20% for one position is like a really huge number. Of course, for Micron and the other company is a bigger number, percentage of his portfolio. But we can learn something from his portfolio, from the way he looks at Alibaba right now. Now, of course, we have all these other guys that have added many shares to their positions, and they are buying, as I can see, as much Alibaba as they can. But there are many YouTube videos talking about what the super investors are doing. So we'll proceed on with the next things that I want to talk about. Now, let's look very fast at some of the fundamentals of the Alibaba that we can take into account. Number one is the number of users, that they are growing each year kind of fast. You can call that slow. Alibaba is becoming something like a mini like a baby Amazon. You can call it the baby Amazon, I think. Tell me what you think down below in the comments. We can see that the annual active customers are sitting around 800 million right now. I think you can for sure say that there will be around 1 billion by 2022, and this company will get even bigger as the time goes on. Now, looking at the different revenue segments for each quarter that Alibaba has, of course, the e-commerce, it's a core of this business, of their business. The commerce is a core of their business, and we see a huge growth over time. Now, the other thing that is pretty interesting is that even their cloud computing is growing a bit. Let's see the annual revenue segment chart to understand that even more. At the annual revenue segment chart, we see its commerce growing all the way from 2016, basically going from below 20 billion to $100 billion, or like $90 billion, if not 100. And the interesting thing right here that we can see is that its cloud computing business is growing, which is like not bad. It's not bad. You can say that it's staying the same. We see a big growth right here relative to where it started, which is really nice in my opinion. Another great thing that I really liked when I looked deeply into Alibaba is that they are buying more of their shares back, which is a great thing for any investor in this company. And it's another great thing that it shows big confidence from its leadership, from Alibaba's leadership in the future of this business, and they like the price at the current levels, so they even increased that as we will see right now. For the year from April 1 of 2020 to May 13 to 2021, Alibaba repurchased approximately basically 0.62 of the ordinary shares issued. And this is a really good thing because there's some other companies that they don't even do anything with their shares, or they might even dilute the shareholders. And this means that you hold even a smaller, basically, size of the pie. They give you even less. On the other hand, when a company like Alibaba buys back their shares, it means that right now there are less shares on the market, which makes their shares that you already have even more viable. And that happened in 2020 to 2021. And this metric for me, the fact that they increased their buyback program from 10 billion to 15 billion right now for 2021 and so on, is a great metric that is as good as the undervalued metric from the historical P to the relative P price to earnings ratio right now. But let's move on. Another point that I would like to cover is the fact that, of course, we have the risk of the communist Chinese party that everyone is afraid of and is scared of the basically power that it has to destroy everything good that Alibaba does. But what I think is that we won't even remember this in 2 or 3 or 5 years. It reminds me of something like different scandals like Cambridge Analytica from Facebook. Nobody even remembers that when Facebook is standing at like 365 per share right now or something like that. Looking back at this, I don't think it will even be a problem, and a company as big and as good with the high growth that Alibaba has will be able to confront it well, and it won't let it become that big of a problem. But of course, we never know at the end of the day, so you can draw your own conclusions at the end of this video. And let me know about your thoughts in the comments down below. Okay, so right now for almost the end of this video, let's take a peek in this chart. What we see with the blue line is the S&P 500 index, which looks significantly overvalued, sitting at 4,500 basically. Imagine if it was 45,000. Anyway, and with the yellow line, we see the Chinese index, the Chinese ADR index, which looks a bit undervalued at first sight. But what we can also see is that in the past, they were tracking each other a lot. They were tracking each other a lot, all the way from 2015 to 2018. They lost a bit each other here. We see a divergence, but they come back together again. And then we see the huge crash. The real question right here is whether they will track each other again in the future. Many people, what I think is that the S&P, of course, is overvalued. We know that. But will the S&P drop, or will the Chinese index, on the other hand, rise to get in line with the S&P 500 again? Tell me what you think about this in the comments. What many people think is that the Chinese index, even after this crash, is overvalued. Many people think that. I think for the growth that I believe China has in its hands, and many super investors believe that as well, I don't think it's that overvalued. And throughout time, I don't know in how many years, I think they will track each other again. But of course, there is the chance always that it might keep on diving, and maybe S&P 500 will join it and dive as well in the future. We don't know. What I know and I can tell you for sure is that as long as this company drops, I will keep buying even more. Red days, I will add even more. Green days, I will hodl and buy very small positions, DCA. But red days, I'm buying even more. And especially at around 150 to 160. For the near future, I think we will see an inflection point. It has dropped so much, and the circumstances are really not that bad. Of course, the FUD is bad when from the media, from the news and the media. But I hope that in the near future they will sometime track each other again. Now, to end this video, this is a street buy right now. It's not that good of a day. It's a portfolio that I recently started, going aggressive on just 5 or 6 positions. Google is one of my favorites. But my second favorite is Alibaba. You can see right now that it's standing at 36% of the portfolio because I keep buying more, because I see it as the most undervalued right now, and the one that will produce the biggest growth up ahead. Of course, it's not that big of portfolio. It's not my private account. It's a street pie that I'll be sharing with you guys. But over time, you can be sure that will become even bigger as time goes by. That's all for today. I believe in Alibaba. I will keep investing in Alibaba. I think this video has got really big by now, so it might be the best decision to end it. So tell me what you think. Tell me your thoughts down below in the comments. Like the video if you found it useful, if you learned something new. And of course, subscribe to the channel if you want to stay in touch with me, my updates, the street pie, the portfolio that I run for you guys, and to beat SPY, of course. And I will talk to you guys in the next video. Peace.